You walk in for a $300,000 mortgage. You picture a vault of someone's savings. There's no vault. The bank just types the number in. That money didn't exist a second ago. Made from nothing. One keystroke. Almost all money is made this way. Banks don't lend money, they create it. You were taught a simple story. You deposit $100. The bank keeps a little, lends the rest to someone else. They call it fractional reserve. It's backwards. And no, this isn't a conspiracy theory. Even the central bank admits it. The loan comes first. The deposit is created by the loan, not the other way around. Back to your mortgage. The bank types it into your account. It's new money, not your neighbor's savings. It writes down what you owe and what you can spend. Two numbers, one keystroke. Picture a baker who wants a bigger oven. The bank types her a 50,000 loan, brand new money, into her account. She buys the oven from a supplier. He pays his worker with it. The worker buys groceries. One keystroke rippled through 3 lives. Most money you touch started just like that. Most money is just this: numbers in bank accounts. Only a sliver is physical cash. And the government makes that part. Fractional reserve? The reserve's a myth. In 2020, the Fed set it to zero. It never held them back anyway. Money isn't moved, it's made. So banks can just make money, type a number, poof, new cash. Then why not make infinite money? Why isn't your bank a money printer? Something holds them back. Hard. 4 invisible leashes. Here they are. First, someone has to want it. No borrower. No new money. A loan needs 2 hands, and you have to be trusted. Will you pay it back? Lend to deadbeats. You lose. So the bank picks carefully. Second, the bank has skin in the game. It must put its own money down, behind every loan it makes. If the loan goes bad, the bank eats the loss. Real money at stake. So it can't type forever. Third, borrowing has a price. That price is the interest rate, and the central bank sets it. Turn the rate down low. Borrowing is cheap. More loans. More new money. Crank the rate up high. Borrowing hurts. Fewer loans. Less new money. Fourth, other banks are hunting. Lend too greedy, you lose them. So nobody types a loan. Banks make money. On a leash. Now flip it. You pay the loan back. Every month a chunk goes back. Your $300,000 owed gets smaller. But watch what happens to that money. It doesn't land in a vault. The bank deletes the number. That money is gone. Erased. Remember how it was born? Just typed. Paying back just untypes it. Made by borrowing. Killed by repaying. But not your whole payment vanishes. The interest is the bank's cut. It keeps that part. That's profit. Only the loan itself disappears. So the money pile breathes. You borrow. The pile breathes in. You repay. The pile breathes out. Money is born, and money dies. But wait, doesn't the government print money? Yes, but only the cash in your wallet. That's the small slice we saw. It does not type the rest. Your bank types that. Every single loan. So what does the government do? It sets the price of borrowing. Think of one giant gas pedal. Press it down. Borrowing gets cheap. Lift off. Borrowing gets expensive. But the government's foot just steers. The banks are the ones driving. So where is all this money? Look at your bank app right now. That balance is just a number, a promise glowing on a screen. The bank doesn't hold your cash. Now picture everyone checking at once. All those promises adding up huge. But the actual cash is tiny. There isn't enough for everyone. So why doesn't it fall apart? Because we all just trust it. You don't grab your cash today. Your neighbor doesn't either. The whole thing runs on calm. Then one day, trust cracks. A rumor spreads. Get your money out. Everyone reaches for the cash at once. That stampede is a bank run. March 2023. Silicon Valley Bank. It was the bank for tech startups. One scary update and fear spread. Founders warned each other in group chats. $42 billion left in a day. And the cash? Mostly already lent out. There was no giant pile to hand back. Promises don't survive a stampede. Any bank can fall this way, not in a line, with a tap. The bank fell in about 48 hours. The money was there the whole time, until everyone reached for it at once. Money on a screen is a promise. So a bank can type money into being. Now picture a dial they can turn. Turn it up. Banks lend like crazy. New dollars flood out. Way too many. Too much money chasing the same houses. Prices balloon. A bubble swells up. Everyone piles in. Nobody wants to miss out. This actually happened in 2008. Banks made a flood of home loan money. They lent to people who couldn't repay. Then the bubble popped. Home prices crashed, savings vanished. Now turn the dial the other way. Scared banks just stop lending. Remember, repaying a loan destroys money. Old loans get paid off. None replace them. The money pile actually shrinks. Less money around. People stop spending. Businesses cut jobs. That's a recession. So who wins from money made of nothing? The bank conjures the money with a keystroke, then charges you interest on it forever. So is this a giant scam? Be honest. It feels like one, but it isn't fraud. It's the system, and it's built this way on purpose. Money used to be chained to gold, a fixed pile, stuck in a vault. Economies couldn't grow past the gold, so we cut the cord. Now, money can stretch to fit, grow the economy, grow the money. That flexibility is the power and the danger. Now forget the banks. This is you. Every new loan adds fresh money. More dollars chase the same bread. So your dollar slowly buys less. Your savings melt just sitting there. Think of your grandparents' prices: a coffee, a house, a car, all a fraction of today's. Same coffee. The dollar just shrank. Nobody robbed you. The pile just grew. That quiet tax has a name: inflation. And your mortgage? New money too. You grew the whole pile yourself. But banks get greedy. They overlend. Remember 2008? The banks were about to collapse. So who paid to catch them? You did, with your taxes, your paycheck, your rent, your savings. So what do you actually do? Don't just sit on cash. It's the one thing guaranteed to melt. You can't stop the pile growing, but you can stop being the one diluted. Own what the new money chases: homes, stocks, real things. Remember the last video? This is why the rich borrow to own. Don't hold the money. Own what the money runs toward. Money isn't printed, it's promised.